This webinar will introduce you to the tax-free cash growth warehouse strategy and show you step by step how you can use this strategy to become master of your financial world. The problem is most everybody is following down this path that big finance, big business, Wall Street, and the government has created for us to make them rich. This webinar will demonstrate how and why the tax-free cash growth warehouse strategy provides the solution, how you can break free from dependence on the finance industry, get out of the rut of paying up to 34% of your income to finance charges, learn how to earn money with every purchase you make, become master of your financial world, and gain financial independence. Aloha, and welcome to your webinar. We're your hosts. I'm Stan.
And I'm Amanda.
We are financial strategists.
You are about to learn how to make your money work harder for you, to make more money for you rather than you working harder for your money.
This webinar is loaded with powerful information. It's about an hour long, but we want you to know who we are and how we got to this point. But we'll be real brief because we really want you to get the maximum amount of usable information from this. We've not always been finance strategists.
That's so true. In fact, I have worked in the corporate world of marketing management for most of my career.
I also worked in marketing and sales management, and then I became a business owner as a professional photographer.
And you know, we did all the things we're supposed to do. Invest in retirement accounts such as 401ks, IRAs, mutual accounts, a little bit of the stock market, and so forth.
Then in about 2010, I watched as my photography business dissolved into the pixelated landscape of selfies. I knew then that I had to change careers again. And that's when I got recruited into the finance industry. About 2013, I got my first introduction into the infinite banking strategy or concept. I dug in. I did my research, I studied, I became an expert in infinite banking.
And when Stan told me about the infinite banking concept, I knew it was something we could use to great advantage, and we began to put it into practice. It has truly transformed our financial world.
Sure has. And as I began working with the infinite banking concept, personally and with my clients, I began incorporating additional finance strategies such as cash flow management principles, personal sweep account strategy, snowball strategy, and so on. So with all of these strategic components integrated, I felt the need to give it a more descriptive and accurate name. So we call it the tax-free cash growth warehouse strategy, or TFCGW for short.
So Stan, what is infinite banking?
Infinite banking is a term coined by Nelson Nash in the early 90s to describe a method of self-financing that has been used in America for about 200 years now. Infinite banking, and by extension, the tax-free cash growth warehouse strategy, utilize a very special kind of cash value contract with specific mutual companies that provide high, tax-free compounding interest. These accounts allow for leveraging of the cash value of the contracts with no penalties or fees and without interrupting the Now that we've introduced ourselves and defined what the basic concept is, let's get to the good stuff. And while it's true we may have never met, we know something about you. Just by the fact that you're watching this, we know that you are smarter than most people, you are more open-minded and inquisitive than most, and in just about an hour from now, you will be among the top 2% of all the people in the United States because you will have knowledge of and an understanding about the infinite banking concept and the tax-free cash growth warehouse strategy that 98% of the population do not. And if you stay with us to the end of this webinar, well, we're not even selling anything here, stay to the end and we have a special offer for you. There are a number of reasons that may have driven you to seek out this knowledge. 1, you're tired of being used and burned by the banking system. 2, you can see the writing on the wall and don't want to be caught in the collapse of the stock market. 3, you may have heard something about how the wealthy got that way and preserve and pass on their wealth to future generations and how infinite banking has played a part in that. And 4, you want to take control, become master of your financial world, and prosper. I have to say that infinite banking and the tax-free cash growth warehouse are not magic. This is not a get-rich-quick scheme. It is the most dynamic and powerful financing strategy available. And by putting it into practice, you will be able to break free from the commercial banking systems. You can be protected against the failings of the stock market. You will grow your wealth safely and guaranteed, and be in a position to pass wealth on to your progeny. And you will become master of your financial world and prosper. So if this concept and strategy has been around and used for 200 years, and it really is as wonderful as we and the few others that teach and promote its use say it is, you may wonder, why isn't everyone on board with this? And why haven't I heard about it until now? And you know what? We're with you on that. And that's why, since we started putting it into practice and developed the TFCGW strategy with infinite banking, we have been on a mission to educate as many people as possible about this. So let's get into what it is and how it works and how you can get going with it. Remember, we said that we know that you are smarter, more open-minded, and inquisitive than most people? Well, one reason everyone is not on board already is that big business, the commercial banking system, Wall Street, and even the government are more interested in promoting their own wealth and prosperity than yours and mine. Generations of Americans have been misled into just following along with what they've been told is good for them without really examining the reality of what's going on. So when someone comes along and says, there's a better way, and you can do this, most people fall into the closed mind trap and just continue to do things the old way that everyone else is doing. But as the saying goes, doing what you've always done and expecting different results is the definition of insanity. Now, the engine that makes the TFCGW and infinite banking so powerful is the magic of compounding interest. But the secret is the specialized accounts that provide high compounding tax-free interest and allow you to leverage your cash value without penalties and fees and this is key, without interrupting the compounding growth of your money. We'll examine compounding interest in a couple of minutes, but first, let's look behind the curtain at how the commercial banks operate and make the kind of money they do. And when I say commercial banks, I mean all the banks that are open to the public. Now, here's one of the most amazing things that the government allows the banks to do, and it's called fractional reserve banking. We call it fictional reserve banking, and here's why. Well, you would think that in order to loan $10 out, you would have to have $10 to loan, right? And in every other case, that would be true. But with banks, they're required to only have $1 in liquid reserves for every $10 they loan out. And that's actually illegal if you aren't a bank, but that's another story. So now let's look at how banks really make their money and the principle of money in motion, along, of course, with fictional reserve banking. We'll start with a deposit that you make into a bank. The bank is one of the most generous banks in the country, and they pay you a whole 2% annual percentage rate of interest. Now, with your $10,000 deposit, the bank can now loan $100,000 out. I know that's ridiculous, but that's how it is. Fractional, fictional reserve banking, you know. So the bank gives someone a mortgage or refinance loan for $100,000, and they charge 5% interest on that loan. And we're not going to get into this, but the interest on mortgages and auto loans and many personal loans are amortized, which means the total interest is calculated for the entire repayment period and then added to the front end of the loan. Suffice to say that the banks collect a whole lot more interest that way. Now, as those mortgage payments come into the bank, they can now loan out 10 times what they get back in. So now they give someone an auto loan at 4% and someone else a personal loan at 10%. Let's take a closer look at what's happening here. You deposited $10,000 and the bank is going to pay you 2% interest. With the magic of fractional reserve banking, they make a $100,000 mortgage loan with your $10,000 deposit, and they collect 5% interest on that $100,000. Payments on that mortgage loan come into the bank, and they loan out another 10 times what they receive in for an auto loan at 4%. Those payments come into the bank, and they, again, loan out 10 times what comes in for a personal loan at 10%. So let's add it all up. The bank pays you 2% on your $10,000. That's $208 interest the first year. Here's what the bank collects in interest the first year. 5% interest on the $100,000 mortgage. And remember, this is amortized interest, so it's not just a simple 5% on the $100,000. It's $3,108 per year for every year of the 30-year loan. Well, that sounds like less than 5%, which would be $5,000 the first year and then less each year. But as amortized interest, it actually totals $93,000 plus over the 30 years. But I digress. The auto loan returns $653 the first year at just 4%, and the $5,000 personal loan returns $161 the first year at just 10%. So how's everyone doing so far? Still with me? Let's cut the clutter here to the bottom line. Now you gain $208 on your $10,000 deposit, and the bank gains $3,922 in interest from the money you deposited. That's 18.9 times what you make on your money, or 1,890% more than you make. And that's how the banks get rich on our money. The important lesson to learn here is the way banks get rich is they keep money in motion. Money in motion tends to generate more money. And while we can't practice fictional reserve banking, we can create a financing system where we make our money grow while we leverage it and keep it in motion to make more money for us. So how about we change things up and just take the banks right out of the picture altogether? Of course, in order to do that, we need to find a way to earn some decent interest without risk, and we need to be able to leverage our money as it grows. Well, we definitely want the interest to be compounding interest. Why? Because compounding interest means that interest is paid on the additional interest as well as the principal. We want the interest to be tax-free, and we need our money to keep on growing even while we're leveraging it. We'll get back to this and where we can establish these cash-rich contracts with all these advantages. But first, we want to demonstrate the powerful advantage of compounding interest.
There are different kinds of interest. There's simple, there's amortized, as we mentioned earlier, and then there's compounding. Einstein called compounding interest the eighth wonder of the world. Here's why. At 10% compounding rate, your money will double every 10 years.
I remember in junior high school, I heard this question. If you were offered a job for 1 month, and you could select how you would be paid, and your choices are $1,000 per day for 31 days, or 1 penny the first day, then your pay would double every day for 31 days. So that would be 100% daily compounding interest for 31 days. Which would you choose? Obviously, $1,000 times 31 is $31,000. And that's a pretty good sum for a month's work, whatever the work might be. But here's the thing, starting with just a penny at 100% compounding interest for 31 days comes out to over $10 million. I know that doesn't sound possible, does it? But check it out. Here's how it breaks down. And here's another surprising fact. You can actually earn more money with a lower interest rate than what you pay at a higher interest rate, as long as your earning rate is compounding. Real quick now, if, for example, you're earning 4% compounding interest on $10,000, and you take a loan at 6% for $10,000, and let's say the repayment on the loan is for 5 years, the loan will cost you $11,599.80, including principal and interest. So that's total interest of $1,599.80 over the 5 years. And at the same time, you have $10,000 in an account earning just 4% compounding interest over the same 5 years, and it will grow to $12,166.33. And that's if it's compounding only once per year. It would be more if it compounds quarterly, and even more if it compounds monthly. So even if you earn at 4% and pay at 6%, the same amount of money will grow more than $500 over what you pay at a 2% higher interest rate. That is partly due to the fact that your loan is being charged interest on a declining balance, while your savings is earning on an increasing balance. And feel free to check my numbers. There are plenty of interest calculators online. I used moneychimp.com for the compound interest calculator, and credit.com for the general loan calculator, which gives the monthly payment for a loan amount you input and the interest rate and repayment period you input.
Now back to the main event. As you must know, currently 2% is the highest interest rate you can earn at a bank. That interest is not tax-free, and you cannot use your savings and have it continue to earn interest for you. So where do we find these special cash-rich contracts we mentioned earlier?
Interestingly enough, they are contained within whole life living contracts with specific mutual companies. Most people refer to these as whole life insurance policies.
What? Life insurance?
Yep, that's right. But not just any life insurance. Definitely not term and not any kind of universal. Not even any kind of whole life. It has to be participating whole life, and that's why it has to be with a mutual company. Most insurance companies are not mutual companies, so they don't even offer participating policies. Participating means they participate in the profits of the company by means of dividends. I've done the research, and there are no other savings vehicles that offer all the advantages that participating whole life provides. And here they are. High rate of return with compounding dividend interest. Tax-free growth and distribution. That is, benefit proceeds are distributed tax-free, and when leveraging, as we will describe, no taxation is triggered. There are no fees and no penalties for leveraging and taking distributions. Your cash value is liquid. Access anytime for any reason, no questions. You get guaranteed values with no downside risk. You have complete control of your contract and cash value. There's a verifiable 200-year history of success with these companies, and the companies we work with are over 160 years old. Your cash value grows tax-free, completely invisible to the IRS, and there are no RMDs, that is, required minimum distributions, as there are with qualified retirement accounts such as 401ks, IRAs, and so forth.
We're going to show you exactly how to maximize the value and advantages of these contracts. But first, we want to define styles of financial types. There are 3 basic types: debtors, savers, and wealth creators. We may not be familiar with what a wealth creator is because we're so used to being either a debtor or a saver until we learned this TFCGW strategy. We were debtors, little to no savings, earning no interest. We were constantly borrowing against future income as collateral by means of credit cards and loans, and paying interest in order to do that. So here's what a debtor looks like: starting with zero money, going into debt, then working their way back up to zero. That is where they started. Debtors are always repeating that cycle, always in debt and working their way back up to zero, paying interest all the while. Sound familiar? Savers do the opposite. They start with zero, then they save, and save until they have enough to buy what their heart desires. Then they withdraw their savings, and they're back to zero, and start the savings process over again and again. So which type comes out ahead? Debtors or savers? Neither. Both types are paying interest and wind up with zero. That's right. Debtors pay interest on their loans, and savers pay interest in that they lose the opportunity to earn interest when they withdraw their savings to make purchases. That's called opportunity cost. But the end result is the same. It's called the cost of paying cash. Bottom line is, paying cash stops you from earning interest. So effectively, you are paying interest. And again, both debtors and savers finish with zero. Now, wealth creators save and then use OPM, other people's money, using their own money as collateral, which continues earning compounding interest. Remember the lesson about earning more money? Even when earning a lower interest rate than when you pay for a loan? And that is how wealth creators continuously create more wealth.
We've learned some valuable lessons here so far. Would you agree? We learned how banks get rich by keeping money in motion. We've learned what a huge advantage compounding interest can be. We learned there are 3 financial types, what they are, and what defines a wealth creator. And we've discovered that the best, and really the only vehicle that provides all the desirable advantages we want for our tax-free cash growth warehouse, and that is participating whole life insurance. It's because of all the financial advantages included in these contracts that we refer to them as whole life living contracts. Now remember this, all the knowledge in the world is useless unless it is put into action. When knowledge is applied, it becomes wisdom. Wisdom is a powerful thing. We want you to know that this strategy that we're about to teach you is real, and basic versions of it have been used and are currently used by famous wealthy people, businesses, and banks. Yes, banks are really big on using cash value life insurance. I didn't put them on this short list, but you've heard of the Rockefeller and Rothschild families, right? Among the richest families ever in America. They both used the cash values of their life insurance policies to build and preserve their wealth for generations. There's a book titled, What Would the Rockefellers Do? And it details the way David, the patriarch of the Rockefeller family, used cash value life insurance to build what he called the family office and trust, to build and preserve wealth for his family. Way back, J.C. Penney financed the original expansion of his dry goods store with it. Walt Disney financed the startup of Disneyland with it. Ray Kroc made payroll for early McDonald's a number of times using it. Foster Farms bought their first ranch with it. The Pampered Chef started her business with it. And many elected officials have and still do use it. Most banks hold what is called Tier 1 capital in whole life insurance policies. And why not? It's a high-interest, tax-free growth vehicle that gives easy access to the money. Citibank has over $4.5 billion in whole life cash. J.P. Morgan Chase has over $9.8 billion. Yeah, that's billion with a B. Bank of America has some $18.5 billion, and Wells Fargo has $19.3 billion in Tier 1 capital in whole life insurance. So, if all these wealthy people, businesses, and banks are so fond of using the cash value of whole life, you think they may know something that we don't? As consumers, we tend to be guided into particular paths. We've been told to save and pay cash. And the banks and credit card companies keep encouraging us to buy on credit and pay them interest. The point we want to emphasize is that the finance industry is and has been in control, along with the support of the retail industry and the government. We want to do and take advantage of what they do, right? The banks want us to go into debt and create cash flow for them. And they want us to leave our money with them so they can use our money to make more money for them. We want to work alongside them. We don't want to play in their game. Here's a reminder of why participating whole life living contracts with a mutual company are perfectly suited for the TFCGW strategy. The whole objective of this webinar is to teach you how you can fire the banks, create your own tax-free cash growth warehouse, and make money on everything you buy. Now we're going to show you the specifics of how this works. The first example we're going to use is the basic classic car purchase example. This example uses a 26-year-old female as the owner of the account, and it is a 7-year pay policy. That means the policy is paid in full with 7 annual premium deposits. There are many possible designs and premium options. This is just one. The graph will show the years of purchases, the repayments, and the growth of the account in both cash value and benefit value. We're starting with a young 26-year-old because we want to show how this can work for a lifetime and end up with several cars having been purchased and a healthy retirement income supplement to boot. Okay, here we go. You'll notice that this graph has a column from left to right for each year of the account: the progressive age of the owner, the annual premium deposit made, car loan payments, car purchases, the cash value of the account, and finally, the death benefit amount. Again, we're using a young 26-year-old for this example because we want to show several larger purchases over time. But this strategy works the same no matter what the age of the owner of the account is, and no matter what the purchase is. We're using cars because typically they're larger purchases, and everybody buys cars. We look at the annual premium as deposits or funding of the TFCGW. Remember, this could be your personal tax-free cash growth warehouse. So you want to stuff as much cash in there as you can. That's how you're going to get the most growth and equity in the contract. Equity, or cash value, is what you leverage to use as financing for your purchases. So now, instead of depositing our $10,000 into a bank, we fund our own cash warehouse with it. Again, this example shows annual funding for the first 7 years. Notice that about 60% of what we pay into the account in the first year becomes equity and available cash value for us to leverage. That goes up to about 64% the second year and continues to climb each year. This also is a matter of design. That is, the way the policy design is optionalized, but that is for another discussion. Now, mindset is important. We are creating our own personal financing system with our own personal tax-free cash growth warehouse. And by the way, this is an asset, not a liability. So we think of our premiums as deposits, which they are, that are funding our personal cash growth warehouse, not as a price we're paying for a product. You'll see as we continue that this truly is the case. Now, to be successful with this strategy, you must follow 3 simple rules. Pay yourself first. That'll be the deposit you make into your TFCGW. Pay yourself interest. And 3, recapture. Recapture is maybe the best part. It means to gain back or recapture all the principal and interest that leaves your warehouse as you leverage your cash value to make purchases. This example shows funding the warehouse for 7 years, and in the 3rd year, the owner leverages the cash value to purchase a car. But because there isn't quite enough in the warehouse yet to fully finance the $25,000 purchase, an additional bank loan is required. Now, if you take a loan from a bank, you have to pay them back principal plus interest. We must treat our leveraging of our TFCGW the exact same way. In this example, the repayment was at $500 per month, or $6,000 per year. Which is an additional $5,000 in interest over the 5 years of repayment. Now, let's add up all the out-of-pocket expenses. At $10,000 in premium deposits, over 7 years, that's $70,000. Repaying the $25,000 leverage loan plus $5,000 additional interest is another $30,000. Altogether, that's $100,000. If we subtract the $25,000 leverage loan, the actual out-of-pocket is $75,000. Now, notice that the cash value in our warehouse is now $67,881 at the end of the 5 years repayment and the total of 7 years we've been funding our warehouse. When we subtract that $67,881 from the $75,000 out of pocket, we see that we've actually recaptured 91 cents of every dollar after purchasing the car. In your experience, have you ever recaptured any of the principal and interest you've paid for any vehicle you've ever purchased? I'm guessing the answer is no. I know we never have before. This example shows that the owner of this account has recaptured 91 cents on every dollar paid out for funding the account and repaying a leveraged loan to buy a car. And she still has the car. That's about 91% better than any other method. And it just keeps getting better. This first leverage loan is all paid back, and now the car is 5 years old. Let's buy another one. You can see that there is now $67,881 available for leveraging. But we're going to stay with the $25,000 budget to keep things simple. And we're going to continue to pay ourselves back at the $500 per month rate, which covers our principal and an additional $5,000 of interest over the next 5 years. We're picking up here at the end of the 7th year, and the first leverage loan is fully paid back. And now, at the beginning of the 8th year, we take another leverage loan for $25,000 to buy another car. We can assume the first car still has a few $1,000s of value that can be used to trade in on our new car, so we'll get a bit of an upgrade, but we're keeping to the $25,000 leverage loan. And notice, we aren't making the big funding deposits anymore. So this time, as we repay the leverage loan and interest over the next 5 years, we're really only out of pocket the $5,000 interest that we pay to ourselves. And we have the new car. Now let's take a look at what has happened with our TFCGW. The cash value in our warehouse has grown to $91,473, while we only added $5,000 as interest to ourselves. That's a gain of $23,000. And look at the monthly gains. We paid the leverage loan back at $500 a month, but our cash value grew by $762 per month. That means we've gained $1.19 for every dollar we paid, in addition to recapturing all of the out-of-pocket interest we paid to ourselves. And this TFCGW owner has become a wealth creator, letting her money remain in the account, collecting compounding interest while leveraging it to make purchases and recapturing all the principal and interest. Now, how many times would you like to make this kind of winning transaction? You can clearly see what an advantage this strategy proves to be. I want to get to the next level with this, so I'll just tell you that this example continues through the purchase of 10 vehicles, all with leveraged loans of $25,000. By the time the last car is paid off, you'll be recapturing $7 for every $1 you spent. Your warehouse will be stuffed with over $900,000, and there will be about $1.4 million in tax-free benefit to leave to your heirs. Remember, all this wealth has resulted from financing things by leveraging the growing value of your tax-free cash growth warehouse that you would otherwise have paid interest to commercial banks for, and that you would have bought anyway. Crazy, right? Crazy good. Now, we want to show you what we believe to be the most awesome use of this TFCGW strategy. We call it the small personal sweep strategy. With this, we're going to show you how you can pay all your monthly expenses, rent, food, utilities, insurances, everything, and at the same time save and earn money. Ready for this? Here we have a whole different scenario. This TFCGW owner is a 40-year-old female, and this policy design is a 10-pay. Very similar to the 7-pay we've been looking at, but we're just going to fund this TFCGW a couple of years longer, 10 instead of 7. This example will show how we can use our TFCGW as a personal sweep account to pay all our monthly expenses without losing opportunity cost and recapture 77% of every dollar we spend paying our bills. That's just the first year. As in the example of the car purchases, the recapture and gains get better and better every single year. For this example, we're going to deposit a little extra the first month because we want to start using the cash value of our TFCGW warehouse as soon as possible. And you'll notice that right away, the way we designed this account, 67% of our very first deposit is available to leverage. But we're going to go with $3,300 as our monthly expenses total. So we have to wait to make a second deposit. And that would be the second month's premium deposit. And then we can take a leveraged loan to pay our expenses. Remember, we pay ourselves first. That's the premium deposit. And we pay ourselves interest. So we take a leveraged loan for $3,300 to pay expenses. And we pay it back in full the next month, along with $104 interest, which we pay to ourselves. We're just going to repeat the process every month. And as we go, notice the cash value column. Every month we make our premium deposit and pay ourselves interest. The cash value of our TFCGW grows by some $960, which we can also leverage if we want. By the end of the first year, we've deposited a total of $15,708, and we've paid ourselves a total of $1,144 in interest. And we end up with $13,050 in our tax-free cash growth warehouse. That means we've recaptured 77.4% of every dollar we paid for rent, food, utilities, car insurance, and so forth. So while in this example our expenses total $3,300 a month, we're only out of pocket $746. How would you like to cut your monthly bills by 77% and put that in the bank? Your personal tax-free cash growth warehouse. Okay, so how much better does it get? Let's see. Year two, the costs are all the same. There's the annual deposit of $12,504, the interest paid to self of $1,248 for a total out of pocket of $13,752. The gain in cash value is $12,299, which means in year two, we've been able to recapture 89% of all our expenses. And it keeps getting better. Let's now skip to year five. In year five, we still have the same expenses and out of pocket costs. That is our annual premium deposit of $12,504, and interest we pay ourselves of $1,248. But in year five, we show a gain of $15,735. That means we've recaptured $1.14 for every dollar we paid for our expenses, or 114%. Now we're talking, and it keeps getting better. So let's now skip to year 11. And notice, we are no longer making premium deposits, although we can if we want. But this was designed this way, so let's look at how this plays out. Since we have no deposit cost, we're only paying in the interest, which again we pay to ourselves. So out of pocket in year 11 is only $1,248. But our gains are $9,507. Gains are less this year because we didn't make any more deposits other than the interest we paid ourselves. So now we're realizing a recapture of $7.62 for every dollar we paid for our monthly expenses. We also have $171,078 in our tax-free cash growth warehouse that we can leverage for cars, vacations, house repairs, you name it. And if we die at that point, our heirs get $689,000 tax-free. Now, if you don't have any family or anyone you want to inherit your wealth, you can name a charity or business or scholarship fund, whatever. So don't let any of those details deter you. This is all about you taking control of your financial world, and we're sure you see the value of this strategy now. Good grief. This example demonstrates that you can actually pay all of your monthly expenses without giving up any money, and in fact, gaining wealth as you pay your bills. The previous example showed how you can buy anything you want and earn money and grow your wealth as you self-finance the things you buy with your tax-free cash growth warehouse.
We know this is a lot to absorb, but the numbers don't lie. This is very real. We mentioned this early on. You can use this strategy to finance anything. We don't just teach this strategy, we use it. We've bought furniture and computers, we paid our bills, food, car insurance, utilities, and gone out to dinners. We even pay our taxes with this strategy. And yes, that means we recapture what we pay to the IRS. How would you like to recapture your taxes? This is really the only way that can be done. So let's recap what we've learned here. We learned about the principle of money in motion and how money in motion tends to earn more money. We learned the value of compounding interest, and if we aren't earning interest, we're essentially paying interest, opportunity cost, the cost of using cash. We learned about the three financial types: the debtors, the savers, and the wealth creators. That's what we want to be, wealth creators. And we learned three rules that can turn former debtors and savers into wealth creators. 1, pay yourself first. 2, pay yourself interest. And 3, recapture principal and interest. And we learned that the only place to earn tax-free compounding interest where we have complete control of the use of our money, free and easy access with no fees or penalties, where we can leverage our money without interrupting its compounding tax-free growth, where our money is protected from outside influences, such as lawsuits or even bankruptcies, is in participating whole life insurance with certain mutual companies. And we've seen some pretty eye-opening, mind-expanding examples of how we can actually make money when self-financing things we buy, and even how we can recapture all the money we pay out to bills and expenses and earn money on top of that. Can you see how powerful this tax-free cash growth warehouse and strategy is? And how you can use it in your life? The only thing you have to do to be successful with this is to make sure you follow the 3 rules. Pay yourself first, pay yourself interest, and recapture principal and interest. If you do that, and you can, you'll become master of your financial world and keep your money in your family.
Now, this is important. We've been talking about using participating whole life insurance as the exclusive environment for housing our tax-free cash growth warehouse. But we are not talking about the standard version. Standard whole life insurance, even participating whole life with a mutual company, doesn't generate any cash value for the first few years. We work with the companies that allow for special customization of their policies, and we design our policies specifically for maximum cash value growth. So they have cash value in the very first year that you can use to start funding your lifestyle, become a wealth creator, and master of your financial world. We used car purchases for the first example, but it's up to you what you finance. You have complete control. And then we showed you how you can pay all your monthly expenses and recapture 100% and a whole lot more.
How did we do? Do you feel that we delivered value in this webinar? It is our goal to help as many as we can to escape the control of the banks and financial institutions and become empowered wealth creators by using this tax-free cash growth warehouse strategy. Now that you know how the financial institutions keep people in the rut of giving them their money and keep them coming back for more, it's important that you take this information and run with it. Remember, all the knowledge in the world is useless unless it's put into action. As promised, we've shown you step by step how you can create your own tax-free cash growth warehouse and grow your wealth using the TFCGW strategy for yourself and your family. And this is a proven strategy that's been used for nearly 200 years. The Rockefellers, Rothschilds, Kennedys, and so many others have used it to build and preserve their wealth. Would you like to learn how you can take advantage of all that you've learned here? Get off the hamster wheel the financial institutions have built for you and become master of your financial world? We invite you to take the next step.
This is not for everyone. It's for those who have an open mind, really want to get ahead financially, and are willing to do what it takes. Follow the 3 cardinal rules as we've explained. Pay yourself first, pay yourself interest, and recapture. Personally, as I've said before, Amanda and I have been using the TFCGW strategy to transform our financial world. And if you're the type of person we believe you are, you can too. The options for what you can finance with this strategy are endless. Now that we know how the finance industry is really designed and perpetrated, with this strategy, we've just turned the tables around, so we now work alongside them instead of playing in their game. So if you found value in what we've presented to you here, we'd love to help you put it into practice. If you would like us to help you to create your personal tax-free cash growth warehouse and guide you in putting the power of this strategy to work for you so you can make your money work harder to make more money for you rather than you working harder for your money. We invite you to apply to become our client. And we want you to know that when you become our client, you won't be left on your own. Here are some of the bonuses that come with being our client. Bonus number 1. We'll send you copies of our books so you have all the information we've been sharing with you in this webinar and more, including several different examples of applying the strategy. Most importantly, you will receive ongoing coaching with us and our team. We will guide you in the application of the strategy as you work toward becoming the master of your financial world. It's difficult to put an actual value on this, but other companies charge upwards of $6,000 to teach and coach clients in their finance strategies. And the TFCGW strategy incorporates the strategies they teach. It's all included, but as our client, you don't pay a thing, just the premium deposits to fund your warehouse. And of course, the interest you'll pay to yourself. You need to know that your tax-free cash growth warehouse is integrated into a life insurance policy, so there is some personal information that you will need to provide as part of your application to become our client. All your information is privileged, so just like with doctors or lawyers, we won't share any of it with anyone who isn't directly involved in creating your tax-free. We need to know your current financial situation and other personal information so we can properly design your TFCGW. We want to make sure that you won't be overwhelmed and that it will work for you with your goals. We know this question is on your mind right now. It's one we get with just about every client right off the bat. So, if you want to be our client, you must be able to afford at least 10 times your age as a monthly premium deposit. So if you're 40 years old, you need to be able to comfortably afford to fund your TFCGW with at least $400 per month. If you're 60 years old, you need to be able to afford $600 a month. That is a good starting point to ensure you have a good amount of cash value in your tax-free cash growth warehouse. Now, you can make deposits annually, monthly, or quarterly. But however you make your premium deposits, you'll need to be able to afford at least 10 times your age per month. Again, we design your TFCGW so that you will have cash value the very first year. You can expect to have about 60% of what you deposit as leverageable cash value by the end of the first year. So if you deposit $10,000 the first year, you can expect to have about $6,000 in cash value the first year. If you opt to deposit annually, that money will be available right away. And the percentage of what you deposit will grow each year. Eventually, about 200% of what you deposit will go right into your cash value each time you make a deposit. The vast majority of those in the life insurance business think of life insurance only in terms of death benefit. Most don't even know about infinite banking or how it works, let alone the full tax-free cash growth warehouse strategy. But the way we design policies for our clients is all about creating cash value and generating the maximum amount of cash value over time. The death benefit then becomes more of a side benefit and is determined more.
We want you to have access to as much cash as you possibly can while you are alive. So our TFCGW designs ensure you will have cash value the very first year, and it will grow faster and faster as you continue to fund your warehouse with your premium deposits and with the high compounding tax-free interest. So you will have more cash value to leverage every year as you become a wealth creator with the TFCGW strategy and master of your financial world. Finally, mahalo! Thank you for attending this webinar. Please share the link to this webinar with anyone you feel will be interested in improving their mastery of their financial world.
And to you who apply to become a client of ours, a member of our team will contact you within 48 hours of receiving your application. Aloha. Click the link below to be taken to the application to become our client. We look forward to serving you. Aloha.